I've been a major proponent of the retail investor revolution. I've cheered it on from the very beginning, 2020. Now, here's what I love about it, right? You can see 2020, the dark line here. Those are folks under 40. Young folks were not in this market. Then they started to really get into this market big time. And it got in by rewriting the rules of Wall Street. However, I got to tell you, retail investors in general, they started to ignore the rule book a long time ago. Go back to 1990. For the most part, no matter what age group you were in, you only had 10% of your assets in stock. That was it, right? Now look at this. I mean, look at old folks over 70, 35%. There was no way. All the experts say you never would be 70 years old with that much money in the stock market. And this older generation, by the way, pretty smart about this. Of the $25 trillion, they've got almost half of this. So let's bring in Rosecliff managing partner Mike Murphy. Mike, I know Wall Street dislikes when retail has so much stock market equity exposure, but I got to tell you, what would they have bought? TLT bonds? I mean, they're doing pretty good right now.
I'd say they're doing great. And if you remember, Charles, go back a decade or so, there wasn't enough exposure to the stock market. People were saying that only a very small percentage of people are actually making money. Well, now the older people have more of it. But look, everybody's getting more invested in the market. And where else should they be? They should be invested. They should be ready to ride it out for the long term. It's the best wealth creator we have.
You know, we had Warren Buffett kind of saying, signing off this week, and he's a prime example of that, And you look at his wealth after 65. I mean, I think it was worth like $3 billion at 65 and whatever now. I've lost track of it. I think we all have. But I also think we're at the epicenter of the fourth industrial revolution. You better benefit from it while you can. I love in one of your notes recently, you said, don't get spooked, right? We just kind of had that conversation with Rich, right? We see consumer confidence on Friday plummeting to a record low, valuations at record highs, and now Michael Burry getting a whole lot of press.
Yes, so there's a lot of headlines out there that would spook the retail investors we were just talking about. But if you're going to invest in the stock market, whether it's 10%, 20%, 30% or more of your assets, you need to be ready to ride out the bumps because the bumps are going to come. Consumer confidence at a low, yes. It's going to turn once the government reopens. Valuations, we've heard about valuations, specifically of the Mag 7. Right. For how many years now? You've missed out on so much money if you were focused on that. And Michael Burry? Short, I don't know. I'll take the other side of that.
Yeah, and here's the thing, right? I've been talking about this since last week. He normally put his positions out on the 14th, put that out on the 2nd or 3rd, right? Trying to nudge the public.
Yep.
And now he's waffling a little bit. I do want to get back to the valuation thing because this is where active managers, professional managers, one reason that they're so down because they can't buy stocks that are too expensive, but they can't buy the little smaller names because they're too cheap or not known. They put themselves in a dead zone.
It's a tough time to be an active manager because I think you have ETFs now as they've become more mainstream. People realize they can get exposure without having to pick which one's going to outperform. Who saw NVIDIA being a $5 trillion company? I don't think a lot of people, but here it is. So if you have something like a basket of S&P 500 companies, right. NVIDIA is now your largest holding.
Right. All right, let's talk about some stocks that you like here. Spotify, it's been kind of drifting here lately. What's going on here?
So the earnings were great and the stock sold off pretty big on it. It's been up close to $800 a share, but look at it here in the mid 600s. It's about $130 billion market cap. But these guys, I'll say right now on the air, they've won the music race. Apple Music isn't going to beat them. They're where they want to be. Yeah. So they have pricing power. They're going to continue to get more subs. This stock, in my opinion, goes much higher.
So I'm looking at 2025 being the changing the garden, fintech really making noise, Coin, Hood, and of course SoFi. SoFi's made a huge move and is breaking out again. You still like it?
I love it. Again, great management. Noto's done a great job. He said he would get here, and he is. But again, looking at it at 31, I think a mistake people could make is say it's run from 10 to 30. It's too expensive. Right. It's not. It's still a $30 billion market cap company. Could this be a $100 billion market cap company and a $100 stock? I think it could.
I agree with you. All right, Snap. Snap had the huge gap down earlier this summer, but it gapped up here recently. It just feels like one of these names that has unfulfilled promises. I swear, if the CEO ever left, I think the stock would skyrocket. But you like the risk reward here.
You know what it is? We invest in private companies at Rosecliff, and Perplexity is one of our holdings.
Right.
The pop you've seen here recently is because they announced a deal with Perplexity. So Perplexity in the private markets, $12 billion market cap. Snap, public, hasn't performed at all, down at $12 billion market cap. I think what Perplexity can bring to the table can really unlock some value in Snapchat, and it's overdue.
Yeah, and it's apparent, there's some smart people who are buying it right down there. Good stuff, my man.
Always a pleasure.
Got to come by more often.
Okay, call me up.